One of the most popular dividend stocks out there is AT&T, stock ticker T, currently trading at $19.50 per share. And it's been a pretty rough ride for the company over the past few years. We can see over the past 5 years, they're down almost 7%, and over the past 6 months, they're down about 5.34%. Now, keep in mind, during that time period, they typically had a dividend yield ranging of around 5 to 7%. So when you include that in the total returns, it's not nearly as bad. Now, to be completely transparent, as always, if we jump over to my do-it-yourself investor toolkit and zoom in, you can see I have a small position in AT&T, which I'm currently up about 5.35% on. Now, the company has been in the news quite a bit lately, mainly due to the fact that they recently had a spinoff with Warner Media, which we'll talk about a little bit later in the video. But in this video, we are going to be jumping into my stock valuation toolkit to see if we can find the intrinsic value of AT&T. We'll be looking at different valuation models, as you can see right here, which will all roll into our output tab. So let's go ahead and jump back over to our stock screener. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. But let's go ahead and come up here and plug in the stock ticker T and hit enter. And you can see all of this data is going to automatically load in. We're currently looking at a 250-day change. Let's go ahead and change that to 365 and hit enter. So you can see they were trading closer to that $19 price range. There was a huge dip recently, but it has bounced back a little bit. But come over here and look at the dividend data. We can see they're currently paying out $1.11 per share, which gives them a dividend yield of, at the time of this video, right at 5.7%. So a pretty good starting dividend yield, and a payout ratio of about 57.6%. Now, there's a whole lot of talk about the dividend and the dividend safety for this company. So let's go ahead and jump over to Seeking Alpha. We'll look at some of these metrics. The first thing I want to look at is the dividend history. Now, we can see right here, 0 years of consecutive dividend growth. If we scroll down and look at the dividend history, they had a strong track record of always increasing the amount they paid in dividends, but after their spinoff with Warner Media, we can see they had their first dividend cut in a very long time. Now, they have been paying out dividends for 38 consecutive years, which is a good sign. Now, if we jump over and look at a few articles from Seeking Alpha, we can see the biggest concern with this dividend is there going to be declining free cash flow? Because if that's the case, I think there's going to be a lot of people that would argue that this is not a safe dividend and it's not sustainable. But I think when I look at some of the metrics for AT&T, so if we come down here, we can see the annual free cash flow required to cover the dividend is around $7.91 billion. And we can see AT&T's reported trailing 12 months free cash flow is right at $13.09 billion. So I think for the time being, this is a safe dividend, but we'll have to see what happens with the free cash flow in the future. So let's go ahead and jump back over to our screener. We can see analysts currently have a target price of $20.28 per share, and the beta is 0.61, so you should see very low levels of volatility with this company. But let's go ahead and start looking at our valuations, and the first we'll look at is Graham's valuation. So you can see the formula we have laid out for us here by Benjamin Graham to calculate intrinsic value. So we're going to plug in some variables like earnings per share. We're then going to multiply that by our growth rate projection, which you can see for AT&T is pretty low, and a lot of that is because it's hindered by the high levels of total debt. We then multiply that by 4.4, which is the average yield of AAA corporate bonds. And once we have all that, we divide by Y, which is the current yield on AAA corporate bonds. And at the time of this video, it's sitting at 4.46. So when we plug all this together, we come to an intrinsic value of $21.31 per share, which is pretty good when you compare it to the current trading price for this company. Now, the next valuation we do want to look at is the discounted cash flow analysis. And typically we plug in a lot of historical data to see how the company has performed historically. But because of their recent spinoff with Warner Media, it's a little bit harder to apply that to this scenario. So you can see they're projecting about $14 billion in free cash flow for AT&T, and then we're going to apply a growth rate projection based off what we know for the company. We can't really use historical data in this scenario, but I'm applying a growth rate of about 2.5% to the future free cash flows for the company, as you can see right here, and also the terminal value, which is the sum of the future free cash flow past the year 2030. I then found the present value of those future free cash flows and added them together, added the company's cash and cash equivalents, and subtracted out their total debt, which is a little dangerously high. That's a huge red flag for the company for sure. But after we do that, we get the equity value, we divide by the shares outstanding, and we come to a discounted cash flow price per share of $17.83. So that is a little bit lower than the current trading price for the company. Now let's go ahead and jump over to our multiples valuation. And typically what we do is we take companies that are similar to AT&T and value them based off using their price to earnings multiple. But in this scenario, really the only good comparable for AT&T, in my opinion, is Verizon. And I typically like to have more than one comparable for the company. So because of this, we're not going to be using this valuation method in our output tab. So let's go ahead and jump over to our dividend discount model. And again, like I said, they did recently cut their dividend. So this prior data is going to show a negative growth rate most likely, but we need to project their dividend growth rate starting from where they're currently at. Now, my hope is that they'll have a slight dividend growth rate of around 1.5%. If you go back and watch some of my older videos, you'll see that I was projecting about a 2.5% dividend growth rate. I've actually reduced that slightly due to the fact I think the free cash flow growth rate will be a little bit slower than I was expecting, and the payout ratio is currently sitting at around 60%, which I think for the company is going to be safe, but I don't want to see it go any higher. So I am projecting a dividend growth rate of about 1.5%, discount rate of 8.5, which leads to a dividend discount model price per share of $16.12. So when we jump over to our output tab, we can see the three valuations we used: grams at around 21.3, discounted cash flow at 17.8, and dividend discount model at 16.12, which leads to an intrinsic value of $18.42 per share. Now, as a value dividend investor, we do always apply a margin of safety. So let's say we apply a 10% margin of safety. Based upon that, our acceptable buy price for this company is about $16.58 per share, meaning it's not quite in that buy range. Now, if we jump back over to Seeking Alpha, we can see over the past year, there were opportunities to be able to buy in at that price range, as we can see right here. But let's go ahead and jump back over to our stock screener, and I'll give you some final thoughts. If you are someone who's currently looking for high yielding investments and aren't concerned with if it's continuing to grow, this may be a stock you want to consider adding to your portfolio at the right price. If you're someone who has a very long time horizon, unless you're able to buy in at a really good value, I think at its current price, it's probably not a company you should consider buying. I do have a little bit in my portfolio, but I was able to buy in at a great price after conducting some analysis on the company. And like I said, I've seen some good returns from the company, and I also got in at a great starting dividend yield. So there you go. There's an analysis on AT&T. If you'd like to be able to download the spreadsheet, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching. Please don't forget to like and subscribe to the channel.